This quarter gave us some of the clearest signals about Oxy's direction going forward. With 9.7 billion sales of OxyChem to Berkshire, a significant reduction in net debt, and early progress towards CO2 injection at the STRATOS DAC facility, Oxy is positioning itself for a much stronger balance sheet and a potential game-changing production uplift. In this video, I will walk you through the business updates, the financials, and what these developments mean for us investors. Let's start off with OxyChem transaction. In case you don't know, Oxy is selling OxyChem division to Berkshire for $9.7 billion. The deal is expected to close before end of year, assuming there's no regulation blocks. Oxy will receive around $8 billion in after-tax proceeds for the transaction. $6.5 billion will go to debt repayment, and $1.5 billion will go directly to their balance sheet, basically bank accounts. This debt deduction will save them more than $350 million in annual interest expense. Right now, Oxy pays around 6% interest for their debt. So if you do the math, that's around $390 million in annual interest savings. After this $6.5 billion in debt payment, they will achieve their debt target of having less than $15 billion of debt on balance sheet. Now moving on to the progress of STRATOS, their first direct air capture facility. They are currently working on starting up the facility and is expecting to start CO2 injection to enhance oil recovery in Q1 2026. I believe this is one of the biggest things to watch in the next few years for Oxy. Based on their experimentation on injecting CO2 into unconventional shale wells after 3 years of initial production, they saw a 45% uplift in production. Based on their model, if they inject more after 3 years, it can potentially improve uplift by 60 to 100%. This is huge because if they can improve production of each well, they don't need to drill as many wells to maintain or even increase production. It will save them a ton of money from drilling expenses. Now let's look at their financials. This quarter, they produced around 1.46 million barrels of oil equivalent per day and generated around 1.5 billion in free cash flow before working capital. They paid down 1.3 billion in debt and have 20.8 billion of principal debt remaining. Just a reminder, this is before OxyChem transaction, so after OxyChem, it will be around 14.3 billion debt remaining. The average sale price for each barrel of oil is $64.93 for WTI, $68.14 for Brent, and for natural gas, it's $3.28 per MCF. In Q4 2025, they will produce around 1.44 to 1.48 million barrels of oil equivalent per day and spend around 1.7 billion in capital expenditures. Now on their priorities going forward, first is to be sustainable and grow dividend. Second is to immediately pay off 6.5 billion of debt after OxyChem deal closes. Third is to get back to their share repurchase program. Fourth is to start the preferred equity redemption in August 2029. Just a note on this, Oxy cannot voluntarily retire these preferred equities before August 2029. Therefore, they will have to wait until August 2029. To retire these before August 2029, they will need to hit the last 12 months shareholder return threshold of $4 per share, which is actually possible before August 2029, depending on the oil and gas prices in the coming years. And last but not least, is to retire the remaining debt at maturity. That wraps up Oxy's Q3 2025 update. Overall, I believe the company is moving in the right direction. I'm glad OxyChem is divested to fix their balance sheet. Debt is finally approaching that long-term target. CO2 injections will be starting in Q1 2026. That could unlock meaningful production uplift. Let me know, what do you think about this quarterly earnings in the comment below? If you found this helpful, make sure to like the video. It will really help me and supports the channel. Don't forget to subscribe so you don't miss my future updates. Thank you for watching and have a great day.